Welcome, ladies and gentlemen. It is Simplified Profits. This is Anthony, your veteran trader and investor with over 23 years of experience in the market. This is the end of the year, ladies and gentlemen, the end of 2023. We are going into 2024. Let's take a look at the market and see where it has been, which we've already done an end of the year video on some of the biggest winners of the year. If you haven't seen it, check it out. Some with over 600% gain. And we are just looking at the market with the same expectations we've had, which is we are expecting a pullback. Now, SMH, Semiconductor ETF, was up almost 1% last week. Now, been calling these swings from the overbought to the oversold to the overbought, which is how we trade based on the stochastics and being over the 200-day moving average, right? We have a list of rules that we follow, strategy in managing our positions, and we are going to dig into that very deep into 2024 with our transparent account and see how quickly we can grow that. We're going to be putting 20% of our income into the account. We'll take a look at the count here in a minute. And but what would we expect for the overall market coming into 2024? Let's take a quick look. Our analysis really hasn't changed any, so if you haven't seen much of the videos, take a look on a couple of the previous if you want to. Recommend buying the book, studying it out if you're going to be following us this year. But looking at the year-to-date change in some of these, SMH was up 70% for the year, ladies and gentlemen. And that wasn't because it was down so much. Look at the monthly. It is setting new highs. So you got to ask yourself, are we in for another maybe 15% gain up to 200 this year? Are we going to get another 70% run? Same with the triple Qs. Everything is about breaking records and tapping out besides some of these laggards for the year. Some of your major ETFs like Dow Jones, S&P 500, triple Qs, SMH, all of those are at basically all-time highs, ladies and gentlemen, and had a great year. Will it continue it through 2024 and have an election year, or during an election year, or will we see some sideways movement and have a lot of opportunity for some swing trades, which there's always opportunity out there. And sometimes we're patient, just waiting for pullbacks, right? Patience will pay off and really just about anything, ladies and gentlemen. But the overall market, this is the Dow Jones. It has been overbought, which we said, I want to say a video back in November, that is coming up on the end of the year. Most people will let their winners run and the market run, just so they don't lock in those capitalized gains they'll have to pay taxes on. And most of them will lock in losses on the losers, which will continue to push that down so they can use that for a write-off. And man, this thing ran so far. I mean, it's in the last month from being overbought has ran 8%, ladies and gentlemen. And on the leverage version of that, that's going to be, let's take a look. We would have been in UDOW on that. And right here, 33% in 2 months after it was over. So it definitely melted up, which usually after strong gap ups, we like to hold them and kind of see how much momentum goes behind it. And that had a lot of momentum, along with SPY. Now the Qs and SMH did pull back. We had a pullback here. We were saying good buying opportunity, and you would have had another swing up there. But right now, we are patiently waiting for the market to pull back. And if you want to keep dumping money in here, go for it. I'm not a financial advisor. This is all my opinion and all just for educational purposes on how we trade based on the book Simplified Profits. And that's what this account going into 2024 is going to be about. It's going to be transparent as possible, showing you how to use your income to grow your wealth and to make strategic, tactical entries in the market and look for bullish stock charts to put your money to work. I've been doing it for 23 years, lost a lot of money, spun a lot of wheels, but with those losses come a lot of learning lessons, and you develop a very simplified strategy to make money. And that's what I've done, and that's what I'm trying to share and teach. These are two positions we have in our long-term portfolio. We didn't want to enter anything, or not long-term portfolio, I'm sorry, which it is. I have multiple portfolios, but for the transparent one, these are long-term positions we entered prior to 2024, which I didn't want to buy anything till 2024. But these are two positions I've been watching. This is the cannabis sector. You can see it in the more detailed videos in the playlist we have under basically that account growth playlist. But we could have easily traded this based on how we trade and been up 20% in 14 days. It has had a minor pullback. Regardless, we're not trading these two. We are entering them for the long term, and we will manage the positions wisely. A BT or BWXT, kind of a little salty in it, really. Short-term moving averages started moving back down, but it's the end of the year. It's a lot of low volume, a lot of weird trading. I'm hoping to see this continue to grind up. We've been saying since January 2023. It's been a buy, and we've had it in 4 of our 5 accounts since then. So I'm really expecting this to bounce back up. If it ends up breaking down a little bit, I'm expecting the 200-day moving average to hold up, and we will be adding to that position once it gets down about 5%, if it gets down about 5%. Otherwise, we will add to it on every pullback. So if it swings up again and then comes back down, we will continue to add to these two positions, unless we're seeing other opportunities and putting money to work in other areas and we're not really down in them. All right, we will see how the year goes. But right now, these are your winners for the year. Well, SPY put up another 25%, Dow Jones another 13%, and these this year put up 50 and 70%. That's a question you should be asking and really paying attention to. Now, I don't think they're going to drop like a rock. I do think the market's pretty strong, but then again, the things that's going on around the world, I mean, open borders, election coming up, wars all over the country or world, and could be another one to break out. China could take Taiwan, which I would hate to be in this ETF if that happens, or in any of them really. But just be careful, pay attention. Remember, your biggest drops happen when it's overbought or when it's under the 200-day moving average. So that's why we buy here for our biggest gains, lock in profit here, and we continue to rinse and repeat. Try to avoid losses by managing our position. And we're hoping to get a lot of swings coming up this year. But right now, we are not putting money to work in anything. The only thing we would be buying is if this broke down, our position got down 5%. We'll take a look at that account in a minute. Or if this pulled back, but we're sitting pretty good on this position. Expecting it to be a really good couple years of growth for that industry. You will probably never see me buy another OTC company. It is very rare. This is just kind of a look around, see what's going on, Peter Lynch type play. The sector has been destroyed as it deserved to be. Not a lot of companies making money, a lot of companies going out of business. And now we are down to really just some of the biggest winners in that industry. And I believe by the charts, this is going to be one of them. This is my favorite chart in that sector. That's why we were watching for a pullback. And then we decided to go ahead and add in that account before 2024. Same with these two. But keep an eye on the market. We could see when people take a lot of profit off the table that they didn't want to lock in at the end of the year for tax purposes come the first of the year. But we are now ready to put some money to work. I mean, been ready, but specifically in our transparent account. So hoping it pulls back, hoping to see some swings available. You want to see a quick scan. So this is our bullish oversold stocks. Take a screenshot. There's 37 of them. We're not going to make it through all of them. Obviously a gap down there. I usually stay away from gap downs for a swing or two. I think United Health was looking okay, but it's already kind of bounced out. BWXT is probably our favorite. Let's see what else we see in here. Apple pulled back. Keep an eye on that. Let's see what else we see. I know this is a pretty big company as far as people watching it. Airbnb. Airbnb looked like it had a nice chart actually. I'm gonna go back to that. I'd like to see it touch the bottom Bollinger Band, but you could have a swing there. But regardless, right now I don't want to enter anything until the market pulls back. I broke that rule with these two just because they were pulled back already, but I planned on managing those positions and hold on to them for a while, so I wasn't really sweating it. This is one we actually called as our favorite stock chart right here. Go back and watch a video. Yeah, basically calling that 20-day moving average. That's up 3%, 3.5% in 8 days. Not one we actually want to put money to work in, but that was our favorite chart in the oversold last week. Kind of went over. So I'm not really seeing anything I like now. Nothing I'm willing to risk a big drop when the market pulls back on. So we are patiently waiting. If we change this to ETFs, ladies and gentlemen, I think cold, which is the inverse, it's basically short leverage on natural gas. So, I mean, that might be a good 20% swing looking at the chart. But other than that, I'm not seeing anything, ladies and gentlemen. We are waiting for this market to pull back, put some money to work, and excited about 2024. Kind of look at some of these bullish charts right now on the high cap 1000. There's 645 bullish charts. And guess what? There's swings and everything, ladies and gentlemen. These charts are going to pull back. You're going to have opportunities in single stocks. You're going to have opportunities in the ETFs that pop up. And that's what we're waiting for. So you got to learn to be patient and wait for the right opportunity to put money to work. It's really just that simple. Patience, good strategy, knowing how to manage your position, knowing how to find a bullish stock chart, knowing how, like, when to cut your losses or profits if something crosses under the 200-day moving average. And you can see in this, as it was under the 200-day moving average and then it crossed over. And you can see throughout our videos, we have plenty of examples of that. In the book, there's plenty of examples of that. And that is it for the overall market. So this is just our weekly update. We are expecting a pullback. Out here, we've been expecting a pullback. Kind of knowing which triple Qs and SMH both did. Triple Qs got close to the oversold. So, I mean, back here in November, we've been waiting for a pullback on SPY and DIA as well. And that didn't happen, which sometimes it doesn't. Sometimes, I mean, these swings can take anywhere from 2 weeks to 2.5 months. But the key is to be strategic and capitalize on the swings and just compound profits, ladies and gentlemen. So hopefully you are doing that. If not, there are really, really simple strategies out there. Specifically, the one I wrote a book on called Simplified Profits, and what we will be teaching in this channel. And that's about it, ladies and gentlemen. We'll take a quick look. Bear with me. Let's take a look at the actual account. Let me swap over to that. So this is it, ladies and gentlemen. So as you can see, we are up pretty good in GTBIF. It was up. I mean, trust me, I was half tempted to lock in profit when I seen it got overbought and right at that little resistance. But once again, we didn't buy this to trade. We bought this to kind of hang on to for a few years with a good 10-year outlook on the sector. Same with BWXT. So these two positions already hold more of the portfolio value than I like. Usually, as this portfolio grows, our long-term stocks should not make up really much more than 20% of it overall. And the other 80% will be trading or keeping cash on hand to average down on anything if we need to. So these positions will be, maybe a few months in, they'll dwindle down to about 10% each of our portfolio. But right now, the account's up 6%, 5.89% going into the year. So we are going to, in January, start adding 20% to this of our income, bi-weekly pay period, and see how quickly we can grow it by compounding profits and using our income to continue to build wealth. And that is it, ladies and gentlemen. I hope everybody has a great 2024. Right now it's the 30th of December, and I hope you have a great New Year's. I'm out.